Good afternoon and welcome back to the latest edition of the InvestTalk market analysis for the week ending July 12th, 2024. And this week I'm titling the video, Did a Major Rotation in Markets Just Begin? I am host of InvestTalk, Justin Klein, and I encourage you to like and subscribe to this channel as well as our podcast, InvestTalk. Now I'm starting with this heat map here. I'm sure most of you have seen something like this, but this is looking on a weekly basis. Okay, so what happened over the past week? Now, Apple and Nvidia still did well. Apple definitely the best, up 4%. But look across the board. Other major big tech names, Tesla down, Amazon down, even MasterCard and Visa down. You had Netflix down 5%, Adobe down 2%, Intuit down 2%, Meta down 2.5%, Microsoft down 1.5%, and Google down slightly as well. So what you can see is the bigger the company is, the worse it probably did. You can see that like in energy, right? Exxon and Chevron did worse than some of these other smaller names. Same with commercial services, right? Visa, MasterCard, the biggest, they did the worst compared to a lot of these smaller names. So what you're seeing is small caps are starting to get a bid. And we can talk about why that is. And mainly it's because of a weaker dollar. But I'll dig into this and help you understand why this is happening and why I said this in my monthly letter to clients and those that are on our email distribution list that this is likely to be a second half that looks very different than the first half. That a market rotation, new leadership is likely um, to emerge, and that was, I sent that earlier in the week, and Thursday was the big week. So we're going to dig into the details, and I'll tell you what I am seeing. Now we'll start off with the consumer price index, or just the economic data that came in this week. Mainly it was Thursday and Friday. CPI came in, and this is month over month, and it came in actually in negative territory. So what you can see is you had 2021 and 2022. That's when all the inflation happened, and then most of last year and into this year, inflation was much cooler. Still elevated above that 2% level, but around the 3% year over year, and that's because you're getting these figures still kind of vacillating between slightly positive and say 50 basis points month over month. Now we have last month it was basically flat, right? Only 1 basis point, and this month, in the month of June, it was negative 6 basis points. So you start to stack enough of these months up, and you start to get a deflationary look. Now the core, that one was stickier, right? That one stuck kind of consistently in 0.25, 0.3. Lower than what we saw in 21 and 2022, but still relatively elevated. And this one is heading back down towards the zero line. Now, these are month over month, but you stack 6 months together and you get an annualized rate that is much closer to the Fed's target. And that is what is likely what the Fed is looking at. And so you had the jobs market numbers this week. That continues to be, not great, right? Dip down and continuing claims for unemployment, but nothing too dramatic there. Core CPI or core PPI, excuse me. This was on Friday, month over month. This did tick higher. Same with the traditional PPI, that did tick higher as well. So what it's kind of saying, this is a leading indicator to the overall inflation picture. So you can see, earlier this year, this is portending to what happened recently, right? The core PPI was, kind of hanging around the zero line. So this is reaccelerating. So what this is saying is, yes, there may be some reprieve, but there likely will be an acceleration probably back, late this year, early next year in inflation. And the big question is, what will the Fed do then? Now, consumer sentiment did tick down a little bit, but still, well off the lows from summer of 2022. And ultimately, it's about what the Fed is going to do and then how that manifests into markets. And for this month, July 31st, there is likely to be no cut. This is where we're at now. But now you have a 90% chance. Oh, let me go back here. You have a 90% chance that there will be a rate cut in September. So that's what the market is kind of coalescing around. And I kind of agree. You actually have a decent chance there's 3 rate cuts. It would be September, November, and December. Now, during election season, is that probably likely? I don't think so. I think I could see the September happening and then the November one being, so close to the election that they probably don't want to, be told that they're trying to influence the election. in some way, shape, or form. Even a September one might do that, but I think they're going to need to do that based on the inflation data. So that's what we're seeing here, and that's why you're likely seeing this rotation in market. So let's dig into that, and I'll start off with this. This is the growth to value ratio, and this is the one where it fell dramatically in 2022. Um, and that meant value drastically outperformed growth, right? You had the Dow not down much that year, but the Nasdaq down 33%, the S&P down 20%, and then you've had growth kind of have a resurgence. Some of this is market structure, and obviously the AI craze, kind of that reflexivity of the way the market is structured now with index funds, kind of forces more money into those bigger names. But if the growth in the economy is going to reaccelerate because of lower interest rates and maybe a weaker dollar, that's certainly going to breathe life into smaller cap names, the value side of the market, etc. And so this was a big move this week. We'll see if we get some follow through, but that was this Thursday break here, and you got a pause on Friday. But do we get follow through next week? I think that's pretty likely. Okay, and if you dig into the individual names, right, the Nvidias that topped a couple weeks ago, and that was kind of a harbinger of that potential weakness this week. And so it's important to watch these divergences here. You can do things like the IWM to the Qs, this ratio, right? This is a big reversal as well this week. Now still in a downtrend, but something to watch for when you have this level of volume and sell off in something like the Qs, right? Look at this elevated volume that you had on Thursday. Same with the S&P, had a bit of elevated volume, but really it's going to be about those those big tech names. Look at the Microsofts of the world that had a bit of a role here, Adobe, same thing, and then Netflix, right? So Netflix kind of looks the worst. You still have Apple still getting some of that AI craze money here, but I could see that having a pullback as well. Obviously very overbought, moved pretty far pretty fast in a short period of time. So what you're seeing here is a market that could potentially be rotating. Okay, and look at gold. Gold prices continue to push towards a record high, so that's doing well. Same with silver. So the precious metals, I think, are still set up very, very well. And a lot has to do with the dollar here, right? The dollar is rolling over, and a lot of that has to do with the yen. So not only is the Fed likely to bring those rate cuts a little more little sooner than the market had been expecting. But also, the Bank of Japan has come out and said, hey, they might change their policy around month end, and that's a hint that things could change and ultimately step in to support the yen, because inflation there is certainly very, very high. And so that's what you're seeing in the yen. If that gains some strength, that's going to weaken the dollar and breathe life into small caps. And that's what you're seeing here. Look at this breakout in the IWM, the Russell 2000. And that's a lot of that has to do with the fact that if the dollar's weaker, these are mainly domestic. Mainly domestic producers, and if the dollar is weaker, it makes their products more competitive. Okay, both domestically and abroad. So a weak dollar tends to be positive for those small cap names. In addition to, the just simply rates going down. Let me pull up this. Let's go trading. There we go. And I'll just pull up, let's TNX. There we go. So you have the 10-year down to 4.18, and a lot of those smaller cap names, they don't have as easy access to capital, and they're going to benefit more from rates coming down. So that's really what you're seeing here is a big potential of a rotation in markets going into the back half of this year, and so what I'm expecting is, if you look at the NYSE, I'm expecting that divergence to keep things relatively positive, but the S&P and the Qs are likely to get a bit of a setback here as money kind of comes out of a tech and those AI names. Remember, this is earnings season. Earnings season kicked off yesterday, actually, with the banks. Some of them did well, some of them not so well. So you had JP Morgan down a little bit, Bank of America, that was fine. Wells Fargo did the worst. That was down, I think, about 6%. Citi was down as well. And what else was down? What else? I think it was Goldman reported. I think Goldman reported. Yeah. So ultimately, and this is another thing, is looking at the IAI. This is the uh, and the broker dealer index. So this is the Goldman Sachs and Morgan Stanleys of the world, the ones that are helping with issuing new IPOs and M&A activity and issuing debt, et cetera. And if those are headed higher, that's the market saying, capital markets are open, they're free flowing, there's not a credit crunch here. Okay. And so, I don't see the market really having a big problem, but I think we go through kind of a consolidation rotation. That's a good way to put it. Consolidation rotation in the for the balance of probably the quarter. And you can see here, this is the credit spreads. This is basically junk, the ratio of junk to short-term treasuries. And if this heads higher, that means that everything's fine. The junk bond market is fine. There's not likely to be a wave of defaults. And if the Fed's just starting with a rate cutting cycle, that's ultimately going to be liquidity positive overall. Now, near term, you are seeing some treasury issuance on the long end that's pulling liquidity out of the system, but that's more turns the market into more of a neutral stance from a liquidity perspective, not something that is dire that pretends to a major sell-off in markets. So make sure you're paying attention to credit markets and the message that is sending you as an investor. Okay, let's take a look at some sectors. Here's just commodities in general. That continues to pull back. But if you look at like an XLE, that's probably the weakest here. But it's still in an uptrend, making a series of higher highs and higher lows. So as of late, it's been the weakness. But if the economy gets a boost of economic activity due to a Fed rate cutting cycle, as well as a weaker dollar, I could see energy moving higher as well. Same with here, industrials. Industrials had a good week, kind of consolidation period, maybe over. Are we headed for a breakout? I think that's certainly possible as well. Utilities, I think those bond proxies, those are doing well, and I think they will continue to do well in the near term. The REITs as well. So REITs had a good week, and I think that's ultimately a positive near term for those names as well. I think that's about it. I think I covered a lot and gave you a sense of where things are headed in the short term. Like I said, a choppy period. I'll go over the move index lastly. That big move down. That's on that expectation of the Fed easing and really enabling governments to borrow more money. And as long as this continues to on a march lower, those spigots are open. Government spending is going to help economic activity. And unless this gets a spike back above the 150 level, there's no real issue near term. And I think that's so important for investors to understand, is that yes, there are problems longer term, but the old saying is, the markets can stay irrational longer than you can stay solvent. So you have to go with the market. You have to play the market that's in front of you. You can't play the market that you hope will be there, or the world that you wish we were in. It doesn't matter. It's about looking at the facts on the ground and making solid, rational decisions based on the likely outcome, and at least in the near term. So that's kind of how I approach the markets each day. And that's how you should do it as well. When you start getting your politics involved and your emotions involved, that's where you make bad decisions. And so that's why I'm here. Hopefully, give you a level head. That's why InvestTalk is there, to keep you grounded and focused on the right things, and making down-to-earth decisions, not ones that are based on a narrative or hyperbole or anything like that. So with that said, I'll leave you there. I hope you have a wonderful weekend. And reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.